Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in corporate filings. Today we're diving into a recent report from Quanterix Corporation, and it looks like there's been a shakeup at the top. Buckle up, because this might get a little dramatic. Quanterix Corporation filed this report on March 27, 2025. This report is called an 8K, which companies use to announce big news that could affect investors. The big news is that there's a change in leadership. William P. Donnelly has been appointed as the new chairman of the board. This means he's now the head of the board of directors, the group that oversees the company's management. He's taking over from Martin D. Madaus. Now, here's where it gets interesting. Martin D. Madaus isn't just stepping down as chairman. He's planning to resign from the board of directors entirely, no later than the company's annual meeting in 2025. That means he's leaving the whole team. Why is he leaving? Well, it seems like he didn't get enough votes to be re-elected at the last annual meeting in 2024. When a director doesn't get enough votes, it's a sign that shareholders, the people who own the company's stock, aren't happy with something. After the 2024 meeting, the Nominating and Governance Committee, a group responsible for these things, started looking into why Dr. Madaus didn't get enough votes. They asked shareholders for feedback to understand what went wrong. The committee and the whole board thought about the feedback and what to do next, including the possibility of Dr. Madaus leaving. But then there was a potential deal in the works with another company called Accession Biosciences. So they decided to wait until they were further along in the talks with Accession. The company says that Dr. Madaus's resignation isn't because he disagrees with the company about how it's run or what it's doing. They also thanked him for his many years of service. This is often a standard statement in these situations. Let's move on to what this filing suggests about Quanterix's overall direction. This document is mostly about the change in leadership, but these things can suggest the company is making a turn. Leadership changes often signal a shift in strategy. Perhaps the shareholders are trying to change course to improve company performance or adapt to changing market conditions. The old chairman didn't get enough votes, so maybe the shareholders are trying to push back on certain aspects of the company's management. In conclusion, this report tells us about a significant change in leadership at Quanterix. While the company is publicly expressing gratitude to Dr. Madaus, the events leading to his resignation suggest there were some issues between him and the shareholders. We can look out to see if this change in chairman and the later new board member affect company policy. Now, for my take on Quanterix, based on this report and without seeing the full financials, it's tough to give a definitive assessment of the company's overall strength, but this is what I think. The change in leadership could be a good thing, bringing fresh perspectives and potentially addressing concerns raised by shareholders. That said, any leadership transition comes with risks, mainly the risk of instability. It will take time for the new chairman to settle in and make their mark. The failed re-election of the previous chairman is a notable risk factor in itself. It indicates a potential disconnect between the board and its shareholders. Rebuilding that trust will be important. Quanterix needs to clearly communicate its strategy and vision to shareholders to avoid future disagreements. Overall, I'd say Quanterix is at a turning point. The new chairman has an opportunity to steer the company in a positive direction, but they'll need to address the underlying issues that led to the previous chairman's departure. What do you think about this change in leadership? Let me know in the comments below. And if you found this video helpful, please like and subscribe for more corporate deep dives.